me just ask you about the price of gold, the run that I just mentioned a few minutes ago. Do you think that gold has priced in all the global volatility that we've seen over these last few months?
Absolutely not. I think gold is really just getting started. The kind of risk landscape, we've seen a variety of different markets benefit from that so far. We've seen U.S. stocks obviously do well, treasuries do well, and gold on a percentage basis is outperformed, but if you look at it on a long run basis, in my view, it's underperforming. So, I think as the opinion of the market begins to shift and begins to look at the U.S. as not as safe as we were looking at it even 2 months ago, I think gold is positioned to do very well in that environment.
So if there's more room for gold to run, what do you think is the major driver of that? Is it the uncertainty about interest rates?
The uncertainty in interest rates and, the U.S. dollar. The U.S. dollar has held, levels around the mid-90s for some time. That's basically because there were really no good other options for currency. But, as the market begins to question whether the Fed is even going to continue to raise rates and may get on board the kind of the global trend, which is continuing to cut, I think questions about dollar stability, may come into play, which obviously would be very beneficial to gold.
Tim, I want to talk about demand here when you look at the price of gold. It seems like investor demand is what's really been driving the price. Is that at all worrisome to you, that it's not for the physical good itself, but it's investor demand?
Well, anytime that we've seen exponential moves higher in gold, and investment demand is what's driven it. To put it into perspective, if you look at the first half of 2016, we saw about $1.5 billion flow into the ETF space, gold-backed ETFs. If you compare that to, say, treasuries, we saw $44 billion flow into that space in the first 6 months. If there begins to be questions about, stability of debt, stability of currency, if a small fraction of that capital flows from treasuries into metals, obviously that can support an exponential move higher. So, I think it, just reflects normally what we see in gold, during periods where gold's making a nice move higher.
You mentioned that flow into ETFs. Yes, there's been one, but it's slowed a bit. Do you see that as potentially a short-term risk at all, the slowing of those flows?
I think it will, it'll be cyclical. It's very difficult for a market to maintain record levels week over week, month over month. The market will begin to look for headlines to justify another move higher. So, you'll go through periods where you'll see a lot of buying. The market will cool off for a period of time, and then we'll see headlines come in that will justify another leg higher. And I think that's exactly what we've been seeing, at least through the calendar year of 2016 so far.
Tim, I mentioned platinum. You look at silver. Those have outperformed gold in recent weeks. Do you see more value there than in gold?
I don't. Actually, one of the market ideas that, we're very active with at Longleaf is looking at the spread differential of gold to silver. Gold has a tendency to get ahead of silver. Silver will, in effect, play catch up to gold. But gold has been the leader, and we expect it to continue to be the leader. Given the fact that silver on a spread basis has caught up with gold, we think gold is positioned in the near and intermediate term to outperform silver.
What does that ratio tell us right now, that gold to silver ratio? How do you use that?
Well, in periods of upheaval, you'll see the relationship between gold and silver move in favor of gold. We've seen it trade as high as 80 to 1. Right now we're trading at a multiple of about 65 to 1. Silver tends to perform better when, or that multiple is lower in favor of silver, when we're going through periods of economic stability and growth, because silver trades, kind of has a dual personality of trading as a fiat currency as well as a industrial metal. When industry is not hot, it'll trade more as a fiat currency, and in that market environment, gold is positioned to do much better. And that's exactly what we're in right now.